Well, I think it depends who you are if you're using it as an excuse. But actually, I thought it was quite refreshing that Best Buy was just really frank and honest about it, that said, hey, the first tranche only hit our cost of goods by about 7%. But hey, the next tranche is going to be more significant as we see these 25% increases come in. And by the way, while appliances, the volumes kind of came down a little bit when they raised prices. This is a less discretionary purchase. When you see the whole consumer electronics business actually really raise prices, that is going to hurt demand. And I think Best Buy was really open about it, as Walmart has been, that the first tranche, you can kind of split the love around and share it between everybody, push it to the vendors. But the second round is going to hit the consumer in pricing.
Paul, who's going to feel it the worst in the retail universe?
Look, if we move forward with this next tranche, we think that specialty apparel retailers, department stores with very limited pricing power and a meaningful portion of their sourcing coming out of China probably hits the worst. But it's a material risk for the whole group. I mean, our math suggests that if retailers were to eat this entire cost, it would actually impact, on average, earnings by 35%. And margins by 230 basis points. Now, to Stacey's point, a lot of retailers are very vocal in saying that they absolutely would try to push this through to the consumer. And we've heard the NRF say that could be as much of a $2,300, amount that's added to the consumer's bill in terms of consumption this year.
Stacey, where has the selling in retail over the last couple of weeks been overdone? What's your top pick?
So, I think Home Depot becomes quite interesting here because they had a lot of deflation. Lumber was down 60% year over year, so that's a short-term blip. They had some compares against some hurricanes but that business is as strong as ever, and it's a market share business for them, and they're doing some really smart things online. And of course, Target, you want to own traffic stories. There's been so much talk about average price increase stories. You want to own where the traffic is going. Target is exactly where that's happening. Half of their comp came from store traffic. So I think you want to stick with those stories.
Paul, does the market have it right in focusing in on these sort of huge scale broadline players that seem, not just tariffs, but that can also just withstand the digital threat? Or are there opportunities that are falling through the cracks in smaller names?
Look, I think that the reality is that in addition to tariff concerns, there has been a little bit of a weaker consumer to start off the year, and that's continued even into the second quarter. And so you do need to look at companies that have scale, that have pricing power, that have really a niche and that ability to, really meet the customer where they are from an omni-channel standpoint. That's why the top picks for us in this environment include Walmart, who obviously has a big grocery business and is growing online over 37%. But we also like a company like Lululemon with significant product innovation, very limited sourcing coming out of China, and then a niche business like off-price apparel retail and Burlington, which has really company-specific drivers with a new CEO coming on board this fall.